Alright traders, George here, and I'm going to share with you some real interesting information here relative to auto trading. We're definitely at a time now in mid 2014 where the little guy on the street has access to technology like we've never had before, from automated trade interfaces to actual auto trade programs that can run on customizable platforms, which is what I've got here. This is our cluster trader, and these trades here that are spelled out by the text are actual auto trades. So they were generated based on a strategy that I created, and it shows where there's an entry and an exit for a scalper. This trading contract happened just by luck to exit at the very top there. That doesn't always happen. Here's a short that rolled over, took out stop 1 and stop 2. Here's another long where the scalper was hit. The trading contract was not hit for the target, and it exited over here at the end of the session. This is looking at a 4-hour window in the morning. There are a couple things to take away initially when you start thinking about auto trading. One of the things that we teach and that I show in the live room is you can manage an auto trade generated order manually. So you could use the auto trader to keep your emotion out of the entry or to respond quicker. There's a benefit in both of those areas. Theoretically, you could let it run to fruition just as you see here, but you could also use your level 1 techniques to manage an open position profit. This move here, this is picture perfect. That's storybook. Here, this is a storybook loss. Signal fired off, long, roll over, boom, boom, both stops taken out. You'll notice that the swing low where that entry signal fired off was breached a little bit before the first stop was taken out, and likewise on that pullback, that swing low also taken out. So 2 stages here could have been looked at as a more defensive spot for a stop versus where the auto trader had the stops. Here's a long where the scalper was hit and price really went quite well in favor, but as the system goes, it exits at the end of the morning, and that open position profit not captured there. So with price moving that close to target, would you do anything? Yes or no? What if we broke below this swing low here? What if we broke below the swing high here? What if you see turning point to black tip on the way up? A couple of filters to look at. So this trade here could have theoretically made quite a bit more with a profit filter in place. This trade here could have lost less with a defensive filter put in place, and that's the attraction of managing an auto trade manually. But that aside, the auto trade, once you have it dialed in, can be pretty powerful on its own. And there's some great things that you can pull out of this whole process. Let me just show you a few things here. This is a strategy on oil using 2 contracts and running 4 hours in the morning just over the last 3 weeks. This did, most of the gains are on the short side here, just a little bit from the long side. $2,500, 96 trades, just under 47% win ratio. So you can see the win percentage isn't a big deal. Everybody says you got to be at 70, 80. It's nice to be there, but not necessary for expectancy. Here, the winning summation and losing summation for both long and short trades. One of the questions you want to ask yourself is, could I limit that $3,000 loss there and the $1,900 loss there if I got involved in the auto trade process using my level 1 techniques? Chances are, right? And even maximizing some of the gains here are possible. But this is some great foundational information here. Few things that I like to look at. One is this breakdown here. This shows you where these static stops are being hit and the second ones are being hit here. Here's our static scalper being hit. These trades here, 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 and here, these are coming from stop and reverses where there's some open position profit that just happens to get clipped on that reversal. And here are these static trading 2 targets all the way up here. So having those big momentum secondary targets, doing some heavy lifting and neutralizing a lot of these losses here. With all these losses being hit down here, one of the things that I would look to do is either tighten the stops and see if that limits losses while still allowing these profits to be hit where they're hit, or increasing the stop value and seeing if some of these would work out if they had a little bit more room to work. Based on what I just showed you there, you would think that tightening them up a little bit would be the way to go. But that's what I look at when I look at the screen here. When it comes to the static scalpers, hitting a bunch of them in this region here, this would lead me to look at potentially moving that static scalper to a higher value because so many of them are being hit here. Another thing to look at, the distribution over half hours. Okay, so throughout a day, where does most of the profit come? Well, it turns out that for the last 3 weeks that the most losses have come right at about the open and then at about 9 in the morning. Now, it takes a while to get in the flow to generate a signal, and you do need to have a set period of time to trade, so it's not that you could just hard cut out the entire red bookends here and just trade this zone and have the exact same profitability, because you do need a little time to lead into a setup and signal. However, as a day trade block of time goes, this is a 4-hour window here. Well, shortening it to 3 hours would certainly be acceptable, and what would leap to my mind is, what about just chopping it off here and forgetting about these guys? How would that affect my data, and would it be beneficial? If I'm not giving that much up in gain, but I'm reducing my trades and staying out of the market by an extra hour, that's a no-brainer. Last thing here is drawdown, and we saw where those profits came in the morning, or I should say lack of profits came in the morning and later in the morning, 6:30 and 9 Pacific, so 8:30 and 11 Central there. Here for the drawdown, one of the things that I look at is where the median of pullbacks is and where things start to accelerate. In other words, if we're going to go lower than a 0.3% drawdown, the probability is that we're going to be going lower. And that could give you a loss threshold where you limit your trading either by reducing the number of contracts you trade or stopping altogether. So not only can we get a lot of power just out of the auto trade component of the strategy, but we can also get some more information to hard cut down what we might do. In fact, I'll show you something real quick. Just remember we're at 25.40 here, 96, and about 47 on the win percentage. So I'm just shortening the session end time to 11 Central, 9 Pacific here, so I'm just looking at 3 hours now. So I just cut an hour out of that 4-hour window, so I cut down 25% of the amount of time that you're in front of the screen, and the win percentage is about the same. The number of trades came down by 10, and the profitability went up by about $700 or so, getting a little bit more out of the long side now. So that is a very beneficial move there on several fronts. One, there's fewer trades. Two, there's better expectancy. Three, there's less time in the market. So those are the types of things that we can do with the auto trader. Just remember that there's power in those orders being put in the market automatically by the auto trade module, but you could also override them once they're in the market and choose to do something to either be more defensive with a stop or more aggressive with profit capture. Okay. In fact, here's this exit right here. This is coming at the end of that morning session. So before that exit happened over here at 10 Pacific, noon Central. Now it's happening at 9 Pacific, 11 Central. So just by virtue of the auto trade system shutting down at that time, that's where the exit comes by default. It happened to time out well there, but that all goes towards that profitability and that drawdown that we saw in that 9:30, 11:30 block, 11:30 Central there. So auto trading, there's a lot of benefit to it. There's emotional bypass to put you in the market without second guessing it, without having any human error in terms of responding slowly. And then you have the actual strategy, the benefit of all the calculations and insight that we can get from our indicators, how we can choreograph that with the chart type, the period value, the time of day, and then whether we choose to manage that manually with our level 1 skills or not. Obviously there's benefits to doing that as well. So just some great stuff here on the auto trader. We'll be looking at this more in the live room. We'll be doing a big training session on this Friday. We'll see you back in the live room.